Hello. Hi, Katie.
Hello.
Can
It
you hear me?
worked. We got it. We're online, it
Yeah.
looks like.
Yeah, can you hear me?
I can hear you. Okay, let me turn up my volume a little bit and then we'll be good to go. Can you hear me okay?
Yes, I can hear you very well. Well, thank you.
Wonderful.
Thank
Of
you. It's a
course.
pleasure to have
After
you
you.
today here. As you can see, people are start connecting. There is people from Bolivia, Colombia, Venezuela, all Latin America. Um,
Wonderful.
So let's see how many people we're gonna, and also recording this is gonna be on my Instagram profile so people can watch it later if they cannot make it right now. So, well, Katie,
Okay, fantastic.
so let's start with yourself. So tell us more about your background, the people don't know you, and see how can you be, you know, short on that one.
Yeah, of course. So a little bit about me. I got into technical analysis in college, actually. So back in the 90s, when I studied some coursework in technical analysis and had an internship with a firm called Dorsey Wright and Associates. So they do point and figure charts. So my initial sort of stages of developing my methodology were with the X's and O's. I've gotten a little bit away from that with my methodology these days, but that's really where it was so formative for me just straight away from college. And I was placed in San Francisco, California, worked out there on the buy side, plotting those point figure charts by hand, and ultimately moved over to the sell side, where I became a publishing research analyst doing top-down analysis, primarily U.S. equity centric, and with a different, starting of course in San Francisco and then moving back east. I worked a bit for Morgan Stanley's technical strategy department, moved on to a smaller firm called MKM Partners in Connecticut, which is where I reside now, and moved on to BTIG from there, which is my last seat before I started off on my own. So now I have essentially an independent research provider type firm where I publish research for individuals and institutions and provide consulting services as well.
Okay, so people can see it. Is that correct? This is the
It's called Fairlead Strategies. Thank you, Juan. And
yes.
yeah, the CMT program for me has been invaluable. I received my CMT designation in 2001. So, I started with level one in college. As I mentioned, I was taking the coursework, so it set me up for that level one exam and ultimately completed the program in 2001 and have really leveraged that knowledge and the network also that the CMT Association has provided to me since then.
So are you still the current vice president of the
Oh
association?
no, no. I have three kids, so I got too busy for that,
Oh,
unfortunately. But it was a great stint with the organization, and hopefully I can join the board again someday.
okay, okay. That's well, you mentioned something very important. It's about the point and figure chart. So you can see here on my back, I have a point figure chart made by Ralph Campora from
Oh wow,
1966 to 1984. He
great.
designed it for me, and that's one of my background. I hope to learn more from Ralph in the future about this.
Well, there's
Um,
there's so much history, and Ralph is obviously, I mean, he started the CMT Association, and he just really inspired me to do what I do now. He actually came to the college that I attended and did a guest lecture when I was there as an undergrad, and he stood in front of the group and took the Wall Street Journal, tore it in half, and said, "You don't need this anymore." So naturally, as a finance major, I was intrigued by that, and he really inspired me.
okay, so as I told you before, I'm a current candidate for the CMT. There's not many in Latin America at this point, but I hope to have more. What's your best advice that you can give anyone who wants to take this exam?
Well, listen, if you're interested in technical analysis, I think it's a great way to get a broad swath of the discipline. You'll learn a lot, and it's foundational to determining what you choose as your own discipline to really have the full picture of what technical analysis has to offer. I think, you'll ultimately find something that suits your process very well. And I
Hmm.
think to start with that good, strong foundation, even if you're just doing technical analysis as sort of a hobby or for your personal account, I don't see any reason why you wouldn't start there and build on that knowledge by pursuing it perhaps professionally.
Okay, that's wonderful. So let's move on a little bit about what your current role right now. So are you, when there are too many indicators, too many ways to analyze charts. Are you more trend follower? Are you more counter trend? Or how do you define on that?
It's more fun, I think, to be out of consensus, but of course it's usually right to be in consensus, I found. So I am a trend follower, and that really came from those days as a point and figure chartist, that the trends do tend to remain in force, and that's just the function of supply and demand, and of course we have ways of determining when those trends are reversing. But I do consider myself to be a momentum-oriented investor. I believe that you want to be where there is momentum. It's not to say there aren't turnaround plays and setups that are more value-oriented. If you can time those correctly, there can be a lot of upside potential and a great way to generate some alpha in your portfolio. So I'm not opposed to those types of opportunities, counter trend or turnaround plays. But really, I want the bulk of my ideas on the long side and the bulk of my own portfolio to look like long-term uptrends. And there's easy ways to determine that. Things like looking at the slope of the 200-day moving average would be a great way to sort of identify that prevailing long-term trend. And then we, of course, make it a little bit more complicated because it's our day job. And we use things, support and resistance, all the concepts around that. And then we also use a lot of indicators. So we use trend following gauges, we use overbought, oversold gauges, and also relative strength tools.
Wow. I can see one of the charts that you have on your back.
Yes, this is my command central here.
Wow, interesting. So when you said indicators, so if they, because I'm studying for that too, it's very interesting what you're saying. There's too many that sometimes you can get confused and try to see which one might work for you. If you are more in the stocks or more in indexes, or you're going to try Forex. So how do you define your strategy based on what you need?
Yeah, and I don't know if they call that confirmation bias, but it's something like that, right? Where you will choose the indicators that affirm what your beliefs are, maybe based on something totally unrelated, right? So I think the way to prevent that is to really have just a couple of indicators that are your go-tos for each category of indicator. And as mentioned, I categorize them as trend following, overbought, oversold, and relative strength. I think if you're running with 3 indicators for each of those, you have too many. So I think several indicators is the most you should have. And if you study the discipline, you'll find that there are some that are very popular, and there's a good reason for that. Something like the MACD indicator, which is the moving average convergence divergence indicator. Very popular, simple trend following tool based on moving averages of price. And that's completely accessible, by the way, a lot of free outlets online to be able to access that information. To something more obscure, I use something called the DeMark indicators. Tom DeMark is really a legend in finance and technical analysis, and has determined a sequential count of prices that determines overbought and oversold readings in real time. So we use those as well. The questions that we get from our clients are more often about those more obscure tools, and I would say the cloud model, which is also called Ichimoku. A little bit less information perhaps out there on that, or a little bit less accessible online to investors, but still very, very value add as a part of a process. So we think it's all about keeping it simple and not having too many tools that are trying to send the same message.
So do you have any mentors in your early days? You still have it, or how's your approach?
I mean, really, there's so many people that I could attribute my methodology to, and my outlook and things like that. Rick Bensenor is one of them. I worked for him at Morgan Stanley. He taught me the cloud model and the DeMark indicators, which I just mentioned. Mike Hurley, who is now at Highland down in Dallas, he's an excellent mentor of mine, who helped me get the top-down perspective and implement some of the market internal measures, things like sentiment, breadth, and leadership. and really helped me build my career around the discipline. So there's many others I'm not mentioning, but I really am grateful to all the folks that have given me really a piece of their own methodology to shape what I do now.
That's good. Are you mentoring someone right now, or?
Well, I hope to be someday. You know, I try to impart, you know, my views. I've gotten a little bit busy with the new company.
Yes, I can imagine.
You know, we are.
Yes, so, kids,
but
right?
It's been good. I mean, it's good to be busy, as you all know, and the kids, of course.
Yes.
But no, we try to do a lot of content for the CMT chapters as we're doing now, and that's one way that we try to give back in terms of the content. And then we have interns, so we bring on interns who then have the opportunity to learn and embrace the discipline, and then perhaps leverage it in their early stage careers. So. We're working on that. Someday, you know, maybe 10 years from now, we'll actually have a more official program.
That's good. Well, I hope to see that. So before I go over your service that you are providing in your company, I would like to know more about your opinion on the current markets. Well, it's been a different year for everyone. It's like a roller coaster, all the price action this year. One of the main topics that everyone has different opinions. So I would like to have your opinion on that.
Of course, it has been a difficult year. And of course, it's not so much even as it applies to the market, but just life in general. So I don't want to minimize that by being bullish on the equity market, but I am. From a technical perspective, it's hard not to be bullish right now. There's widespread breakouts on the individual stock level. Momentum is actually positive across time frames. So if you were to do multiple time frames, daily charts, weekly charts, monthly charts, the MACD indicator as one gauge of long-term momentum or momentum is positive still. So as long as that's on our side, I think it's right to maintain a bullish bias. We can arrive at price targets that are several percent higher than current levels for benchmarks like the S&P 500, looking out to Q1 of 2021. So I think that's what we want to keep setting our sights on, as we could get into a more volatile period come November. And I don't say that because of any elections that are forthcoming, but rather because of the way the VIX sets up. Yeah, so I'm looking at technical indicators to suggest that might be the case. And we did see, of course, in September, the reaction to that pullback, the reaction to the oversold reading was healthy. So that was a good thing. And yet it also told us that the market wasn't any longer in the March to August phase where it was really a nearly uninterrupted uptrend. So it was no longer in the early stages of the relief rally, which tend to be the strongest, but rather moving into a more mature type of uptrend that is characterized by a sort of a stair-step higher. So I think that's where we are. We're stair-stepping higher from here, with more volatility a little bit later in Q4 here. So maybe looking out to early to mid-November.
Okay. So what's your opinion on the energy sector right now? There's, too many thoughts on that.
I mean, we all know it's a long-term underperformer, and the downtrends there are very much intact still. However, we can take sort of a swing at times at the sector, because as it comes off of its lows, you have these oversold readings. So the combination of the stochastic oscillator that I use and the DeMark indicators that I use to gauge that overbought, oversold reading, they are flashing buy signals in the energy sector, both in absolute and relative terms. The implications of the signals that I'm referencing are something like 4 to 6 weeks, not really much longer than that. So it's a short-term signal that we have from energy, but it would leave some long-term support levels intact for some of these stocks. And I think that would be a step in the right direction, perhaps to some kind of basing phase. Way too early to suggest that's underway, but it does look in store for an oversold bounce, something that would be tradable if you can be somewhat nimble and are willing to take those counter trend positions. I actually have an out of consensus view. Here's one, that crude oil will actually break out. We're looking at the November futures on the WTI crude oil contract, and they're testing some short-term resistance based on that cloud model, which is really widely followed for commodities and FX, and also the 200-day moving average. So a little upside follow through for WTI crude oil would mark a short-term breakout that I don't think a lot of people have on their radar.
Yeah, well, that's interesting. And what's your do you use an intermarket analysis tool? You comparing, bonds, commodities, US dollar and stocks or that?
Yeah, we do. So not intermarket analysis in the way of the textbooks, but we do always have, opinions that put across on 10-year treasury yields. The dollar index is in our report on a weekly basis, crude oil, as I mentioned, and gold prices. Things that really influence U.S. equities will always be on our radar. Now, the correlations there sometimes hold up, sometimes they don't. So we try to treat each security that we're evaluating individually with the hope that it makes sense from a macro perspective. And when it does, then it's all that much more powerful. And when it doesn't, sometimes there's information in that. So we always have a bias on those items, which we kind of consider to be macro technicals. The 10-year treasury yield for one multi-decade downtrend channel. And within that channel, we have sort of a trading range having formed with some support right around spot 6.4%. So that's what we're watching short term. So you've definitely seen a loss of downside momentum within that long-term context, but nothing to suggest that a breakout above, say, 1% resistance is imminent.
Okay. So I think someone asked me this in private, and then I'm going to ask you this too. So do you try and you pass and to be a day trader? Did you try that?
No, never. I would be a terrible day trader. I actually didn't make a very good trader either in terms of having a seat on the buy side. It takes a certain personality and I think a very thick skin that I definitely do not have. I make a much better research analyst, but I do think that the indicators and sort of methodology that I use, they do lend themselves to any time horizon. So if you wanted to take a MACD indicator and lay it over a 60-minute bar chart, that's definitely fair game. The DeMark indicators work great on a 30-minute chart of the S&P futures. Stochastics are a very valuable market timing tool, no matter what time horizon you're using. So with that in mind, again, we have these great tools at our disposal, no matter what our time horizon tends to be. I always let the long-term, the monthly charts inform my analysis, but I tend to focus a little bit more intermediate term in my written research. I do that so that it has more shelf life. But there's certainly potential, especially when volatility is heightened as it has been at times this year, to day trade using these tools for sure.
And what is your opinion about algorithmic trading in the same context?
Yeah, I mean, why not, right? I am actually working with a quantitative consultant to develop a sort of a systematic way of approaching my discipline. So, and they're the ones that are busying themselves to develop the algorithms. Thankfully, it's not something I'm qualified to do, but I think a technical component to these algorithms is definitely worthwhile. And, to the extent that you can have these strategies that are then back tested and that you can use AI to improve upon them, I think it's a great offering, and it's just amazing how far things have come.
So you say one of your clients is using algorithmic trading?
Yeah, I do have some clients that are. My clients don't tend to lean towards the quantitative side of things, but we're working with a consultant who's helping us, approach things a little bit more systematically, not as a replacement for the subjectivity that goes into our analysis at this time, but to help generate model portfolios and do things that have more risk metrics involved.
Okay. And before I move to your company specific, I have a question for that too. How important is for you risk management and what you learned from the CMT program too?
Well, listen, risk management wasn't actually part of the CMT program when I was going through it myself, but I think it's really smart that they added it. So it's obviously invaluable. Yeah, they smartly, added that later, but it's obviously invaluable. And I think the technicals can really lend themselves to the cell discipline that so many people are really missing as part of their process. And that in and of itself is a risk management tool. The cell discipline is what a lot of folks come to me for. So they'll say, here's my portfolio. I don't need to know what to buy. I want to know when to rotate out of these positions, when they're getting tired, when there's any kind of breakdown, breakout shifts underway. So I think to have these mathematical indicators and ways to identify support and resistance can really help with that cell discipline.
Okay. So in regards to your company, what's the service that you guys provide for institutional investors? Just institutional investor or?
No, institutions and retail individuals. So that's in part why we branched off and are doing it on our own now, because we couldn't service individual investors when we were on the sell side working for the bigger Wall Street firms. So we wanted to bring it to a broader audience with the belief that there is a demand for this kind of analysis. It's really applicable to anyone who's interested in US equities. So we start with our research top down and always present views about the S&P 500, various technical themes that have manifested themselves, whether it's growth versus value or emerging markets, anything that's actionable. We also go into sector relative strength work, go over those sort of macro technicals that we talked about before, and let the methodology kind of trickle down into long short ideas that we provide. And we publish daily. We make sure that folks are abreast of the short-term volatility as much as we try to keep it intermediate term. And with that, folks can really know when they should be managing risk, whether via hedging or some other way. And they also have idea generation on their side. So we have a subscription service, and we also offer consulting on sort of a different tiered level. And folks seem to value it as part of their process.
Okay. You guys also provide information about options or stock options?
We don't cover options. I think with the directional biases that we're giving it definitely lends it to folks that are trading options. We do have a lot of subscribers who that's all they do. And they're coming to us more for the directional bias with a defined time frame and also defined levels that they can derive from our work. Mm-hmm.
Okay, that's wonderful. So let me ask you, how's your Spanish? Can you say something?
Oh, terrible. Are you kidding? I studied Russian, believe it or not.
But can you say something, or you want to try?
I can say something in Russian.
Okay, go for it. We're going to learn that too.
There you go.
Okay.
It's hello. It's one of the most difficult words, and yet it just means hello.
But have you been in South America or Latin America?
I have. I've spent a little time in Chile, so I was in Santiago and in Argentina, and Buenos Aires and Patagonia, thankfully. It was probably one of the most beautiful places I've ever been.
What was your favorite one?
It had to be in Patagonia. I went fly fishing there. It was just outstanding.
Yeah.
It is beautiful. I can't even, the pictures that I have for there, I can't even believe I had the opportunity. It was really amazing.
I'm just curious. Your name is Katie, right? But I'm sure then in South America, people pronounce it in a different way, correct?
I don't know. Do they? Sometimes more Kitty than Katie, but they usually get it right.
Yeah. So yeah, if you say it by what spell it, it would be something like Cathy or in South America for sure.
Yeah, now that you say that, some people like Cathy. When I studied in Russia, they would call me. They couldn't do Katie; it just didn't work. So they would call me like Yekaterine. So instead, they would use Catherine, which of course is a very Russian name.
Yeah. Okay, so tell us more about your favorite books. So if you had to pick 3 books that you would recommend to anyone, what would be them?
I would say I would go past books and say resources. So, I always recommend folks read the textbooks. So I think with technical analysis of the financial markets, those types of textbooks that really serve as the foundation, I think as much as they may not be the most exciting reads, I think that's a great place to start if you're looking to learn the discipline. And maybe a way to sort of skip some of the chapters that you're less interested in, that would be fine, of course. But to also go to that CMT program and use their level 1 curriculum as a starting point. So that's a collection of various content from different books. I think that's a great way to educate yourself as the discipline. I do like Tom Dorsey's The Point Figure Charting book, of course, because that was one of my sort of landmark things that I got started with. And Jason Pearl's book on the DeMark indicators are great. And that's the thing. So everybody has their own interests. So I think, to find something that suits your discipline and find the expert in that discipline and read up on how they've used those tools. I think that's the best way to go about it. So it may not be DeMark indicators for you, but there is someone out there that knows a lot about the MACD indicator, that knows a lot about intermarket analysis, John Murphy. So there's definitely a lot of good content out there. Online, I think there's also some great tools. I think you had Dave Keller as a guest on this Instagram Live as well, right? And he's at stockcharts.com. They have some incredible resources online that are free to users. And there was an old book called Technical Analysis from A to Z, and that's offered online as well. And you can look up almost as a reference guide some of these tools. So you can look up something like RSI and you'll get a definition, you'll get an example, and some ways to interpret that gauge. So there's a lot of ways to leverage the internet to find the content that you need.
Okay. And what's next? How do you see more in the future? Do you grow in your company, or how you see your future life?
Yeah, I mean, listen, of course, we want to grow, and so far so good. My hope is to take this project that I mentioned on the quantitative side of things and to ultimately develop it into an investable strategy that then we can offer separate managed accounts. So probably within the next 6 months, we'll have that as an offering, which is great because it's a nice adjunct to the research that we're producing. But we wanted to have, before we did something, that we wanted to have back-tested results and less discretion, which we of course execute in our research. So we wanted to have that discretionary piece still there, but also have a discipline that we can back-test in a reliable fashion. So that's our goal, is to add that as sort of an offering, a service. And then perhaps if it's working, then to use that kind of analysis as well for a web-based app where folks can, for example, and this is sort of a dream at this point, but go in and type in a ticker and get output based on our methodology, sort of a score or some kind of ranking system. So that would be another way that we could see taking our product.
That's good.
So,
because that is the present and is the future, right? We're moving
That's right.
in that direction.
Yeah, in the present, we're taking steps to get to those, offerings, and as it stands, we're kind of at capacity with what we're producing. So we're going to ultimately hire folks to help us out, both as junior analysts and interns, and we'll grow the company in terms of people as well.
Okay, and on that regard, so you said something really important that usually a lot of questions about back testing. When you're testing a strategy, how much data you think it would be a good sample for testing any strategy?
Yeah, and I'm not myself a quantitative analyst, but I think if you have 5 years, that can be sufficient. I think it's always great, depending on the discipline, of course, right, and also the time frame over which you're evaluating these indicators and charts. So maybe weekly bar data over the course of 10 years, daily bar data over the course of 5 years. So it really depends on exactly what you're doing, what would be considered sufficient. But I think if you can try to get it so that you're covering a couple of different market environments in your back test, that's a benefit, because run the risk with a shorter time frame of really just getting a sliver of a certain kind of market environment, whether it's the late 90s or otherwise. So I think there's some risk to having too narrow a focus on the time frame.
Okay. So let's see if we can answer a couple of questions here. I'm seeing some comments. I think someone will say hi from Argentina. So you mentioned Argentina too.
Hola.
Yeah. Let's see if you can read that question someone asked. Can you read it? Let's see.
So it says, which certification do you recommend to someone entering in the finance field? And naturally, the CMT program would be one I would recommend. It's more specific, of course, in something like the CFA exam, which is, of course, more broad and even has a technical component to it. So I would certainly recommend exploring that. It's very onerous in terms of the time commitment and otherwise. So I think you really have to want it to pursue it. But certainly it's worthwhile. I've done talks with CFA societies, and those folks seem to all be gainfully employed and really with that good foundation, and not just fundamental analysis, but really kind of the big picture in finance.
So when you were the vice president, how do you see the trend of CFA becoming CMTs? Do you see any trends on that? Do you analyze that?
Well, the CMT discipline or designation is just smaller than the CFA designation, just in terms of number of people, because it's a more narrow expertise. And I think if you can have both, I mean, that really positions you in such an amazing way to differentiate yourself, because you have the CFA, which is so well known and widely respected, and then to have something like the CMT to differentiate you as an analyst or as a portfolio manager or an investment advisor, whatever it may be. I think that's really the way to go, but it's a commitment, right? You really have to want to not only educate yourself, but also spend the time to get the designations.
Yeah, and we're gonna see more female CMT in Latin America too. That's one of my goals to promote this, to inspire.
Yeah, and I think starts young, right? So if we bring more of the discipline to the colleges, which we're trying to do, I think it's something that should be part of a regular finance curriculum. And the more that kids are exposed at college, I think we'll have more females interested.
And also, something really important that CMT Association is doing this year is allow people to take exam online. That they don't have, because the problem in the past was we don't have all the capacity that the US or India or any other countries with where you taking the test. So now by doing this, it's going to accelerate that people can take exam from their homes, whatever they decided to, right?
Yeah, that would make a lot of sense. And there are some things that have come out of the coronavirus and the pandemic that in a way they've led us to adapt, right? Especially in terms of how we leverage technology. And for me, it's been helpful to now I'm not adept at Instagram Live, obviously, but the Zoom sessions that I can do where I can share my screen and show the charts that I used to go fly across the country to do. That's really fantastic. And now that the CMT exam will be offered online, from what you say and what I've heard, what a great way to take advantage of this time that we have at home and study and work towards a designation. I think that's fantastic.
Okay. See if I get the last question right here. Someone asked, how can I apply for an internship in your company? I think this is what someone is asking. Should go to the website, you have like a job posting?
Yeah, so we have a website, and it's just fairleadstrategies.com. And there is a place in which you can use like an information email, and you can just send us an email that way. So that'll come right to me and my partner, Tracy.
Oh, okay. So people should go, I'm going to say this in español. Si están interesados, pueden ir a la website de Katie y ella, por supuesto, le va a responder dependiendo de sus ocupaciones en ese momento. Okay. Well, what do you think about this format? So you like it so far?
It's cool. I mean, I see some, sentences going across my face, so that's kind of interesting. So I'm getting used to it, and I do, of course, have a Twitter handle, so that's something I'm also not very prolific on or with, but we're getting there. I'm trying to embrace the new technologies.
Oh yes, yeah. And people can follow you on Twitter too, right? What's
Of
your
course,
what's
yeah.
your Twitter account?
It's at Stockton Katie.
Okay. So if someone wants to know more about her analysis, I know I've been following it for some time, so I know you share many things, thoughts, and that's good. You keep doing that. Don't stop.
Oh, well, we'll try. Just need more time, right?
Yeah. Well, thank you for your time today. I really appreciate it. I
Of
hope that
course.
everyone enjoys this conversation. I hope we can have another one in the future. And any recommendation, always free to get any feedbacks from my guests in this time. Any final thoughts that you want to share with everyone?
I'd just say thank you. Thanks for showcasing technical analysis and bringing it to a different audience. And if anybody has any questions that they want to take offline, please don't hesitate to reach out to me. So thank you, Juan.
And and
Appreciate it.
and the last thing I'm gonna say, and I'm gonna share with you because that's one of my dreams. I'm from Venezuela. My goals, not right now, but in the future, I'm gonna launch a symposium in Caracas, Venezuela. So
All
I'm gonna
right.
invite
Sign me up.
probably, yeah. I'm not how many people we can bring there because but I'm sure the political situation is gonna get better in the future. We're gonna have open markets and we're gonna have hedge funds. I don't think we have Venezuelan companies in New York Stock Exchange market, but that's one of the things that I also want to change. To have the holding company in the U.S. and then they can trade their stock in the New York Stock Exchange. That's one of my goals, to create the IPOs. Talk to Jay Woods about this project too, and some economies that we can, just thinking, because right now it's on the paper, but doesn't mean it wrong. Just wait a little bit, but I'm positive that we might do it in the future.
Well, that's exciting and obviously a good endeavor. So if it doesn't happen in the near future, I'm sure it'll happen in the far future, right?
Yeah, oh yeah. Well, thank you for your time, Katie. I do appreciate it. I'm gonna record this and